I think we can bring in the Mahindra and Mahindra management who are with us now. They've reported largely in line, slight beat to what analysts' expectations were for the third quarter. We have Anish, Shah, Group CEO and Managing Director at Mahindra Group, with us here in the studios. Anish, great to have you with us here. And congratulations, another good quarter. I mean, in a world and market rife with disruption, I mean, I think you've managed to consistently elicit an upgrade from analysts in terms of their own earnings forecast. So that's quite commendable. And I'm seeing some sort of analysts who cover your stock who've done that once again. But largely on the back of tractor earnings this time around, because tractor volumes are looking much stronger. Anish?
So Prashant, glad to be here. And one challenge with performing well consistently is that expectations keep going up. So if we look at in line with a 47% reported PAT growth and a 66% operating PAT growth, it in some ways talks volumes for our team in terms of execution. And that's what we've done.
Yeah.
Try to keep our head down, really execute well. And it is all our businesses contributing at this point.
Yeah.
Tractor domestically has been very strong, but international we had to take a few impairments. So on balance, our tractor business from an operating standpoint grew 7%, domestic 64%, offset by some international impairments. Auto grew 42% from an operating profit standpoint. Both tractor and auto had very good volume growth. 23% volume growth. Auto margins were up 90 basis points. Tractor margins were up 240 basis points. But beyond auto and tractor, Mahindra Finance up 97% from an operating standpoint, excluding the reserve release that we had in the same quarter last year. Tech Mahindra up 35%. Growth gems up significantly. Lifespace is up 5x. Logistics first profitable quarter after 11 quarters. But beyond the numbers, the businesses are in very good shape. So that is what we are enthused by, is the strong execution we've seen across businesses.
I can tell you that the all Mahindra CEOs together, which Shirin conducted that interview, I can tell you lots of people are, I mean, they've all got their own areas of expertise and stocks they like in that portfolio, and they are all keeping track in terms of what the guidance is, which were put out as part of that conversation. On tractors, actually two questions. What's the volume growth which we should expect here? And I'm assuming that metal cost, and I think steel as a bill of materials for tractors is perhaps the highest, right? Much higher than autos, etc. So as this commodity price inflation works its way through, what margin assumptions, or I mean, how would you forecast them if you can? Is it going to be under pressure? Is there a cap? Is there margins are at a cap now? Further expansion perhaps is not possible. Maybe slight compression. What's your sense?
So the tractor industry is growing very rapidly right now on the back of a very strong rural economy. Our forecast just 3 months ago was low double-digit growth for this year, at about 11-12%. And we're likely to close the year at actually double that, just given what we are seeing over the last few months. That obviously will taper down a little, because long-term growth for us is going to be about 9% or so every year as we look at the next 5 years. But that actually is a good thing, because we like good, steady growth. Our approach has always been to execute better, to create more market share, to continue to increase margins. While there are some commodity pressures, there are various actions we have been taking to mitigate that as well, both for tractors and for auto. So we really don't expect much of an impact from that.
So gross margins can stay broadly where they are?
That is our objective.
Okay.
Wanted to get your view, Anish, on Tech Mahindra. And the kind of disruption and sell-off that we're seeing across the world. Everyone believes that technology names, whether it's software or services, is going to be a net loser. The kind of disruption that we're seeing on account of AI is going to change the business model completely, maybe the death of the pyramid model, etc. In your conversations with Mohit, what is your understanding of how AI is going to impact Tech Mahindra?
So this is, first, it's way overblown. And the death of the pyramid has been forecast multiple times over the last 30 years at every inflection point where technologies come in, starting from Y2K, and then call centers, and then we had blockchain coming in. There are various different technologies that have come in that have disrupted this industry. And the industry always has evolved. Because if you look at what it is today versus even 5 years ago or 10 years ago, it's a very different industry. AI brings up a number of opportunities. And even over the last few years, companies have stopped talking as much about help us with productivity and lower costs, and are talking more about help us win in the marketplace. And that creates a completely different set of opportunities. So how we go to market is very different. The AI disruption also has been known for the last couple of years. And a particular event triggered off a whole chain of reactions, which we feel is way overblown. We feel that it is a huge opportunity in many ways, but it is an opportunity for businesses that are quick to transform and take advantage of it. And in that context, we've got a great management team, we've got a nimble organization, and are very well positioned to drive that transformation.
You don't think Indian IT is unprepared in that sense? You think that's the worry that,
Not at all.
Not at all.
Not at all. Because a lot of people-intensive tasks over time have reduced because technology has come up in many different ways. So that efficiency is already in the system. And AI does bring in more efficiency in that sense, but it also brings in a newer set of tasks that have to be done for companies. And therefore, companies will transform, and I think the Indian IT services industry as a whole is in reasonable shape. But within there, companies that are more nimble, that are quicker to transform, will do better.
One is transforming your own organization, Anish, and the other is going out and, acquiring things which, and not necessarily acquiring companies where you have synergy, which adds another sort of customer area, but basically making. The question is of capital allocation in the technology space, Anish. Is there an active discussion now to kind of try and acquire capabilities which it may take longer to build out, and it's not as if valuations are easy or cheap, I'm assuming. But is that something you would consider? Starts out as a financial investment in something, and then kind of sort of maybe integrates and gives you capability as well.
We've got a clear path for TechM that has been laid out, and a margin target that we've committed to for next year. We're on that track right now. And as part of that, we have committed that we will possibly look at some tuck-in acquisitions, but really not look at acquisition as a key strategy, because we feel that we have a lot of capabilities. We've created an entire new delivery platform with a very strong team. And that's something that puts us in good stead in the sectors we are in, which is a strength in telecom, but also in sectors that we've entered in manufacturing and BFSI in a much bigger way. So we feel that TechM is well positioned, and it has to complete its phase one and then look at growth beyond that.
All right, good to have you in the studio, Mr. Shah. And taking note of that, his concerns seem to be overblown with regard to the tech space. But let's get back to the business, the auto business. Memory chips, there was a bit of a supply issue out there. Do you think things are getting better from here on? When do you expect stability with regard to the supply risk? Point number one. Point number two, on EVs, you were talking that in the monthly run rate, things will gradually improve. So give us a number. What are you at, and where do you see that run rate move to?
So memory chips has been an issue, but something that we've been able to solve for.
Okay.
The lessons we learned from semiconductor and COVID have helped us through various different challenges. Rare earths was a challenge a few months back. Memory chips is a challenge right now, and I'm sure there'll be other challenges that come up. But we have optionality in the supply chain now, and our teams are very quick to react to things, so which is why we've been able to manage that well.
So that's not a big risk now?
We don't see a risk from that at this point in time. And in terms of EV, we are starting to see greater momentum. I've always maintained that EV starts with a great product. We have that now. We've got not just one, but multiple great products that customers tell us they love. The next question always is around pricing. Are we at par, more or less, with what else we can get in ICE? We are today. Range anxiety is the third question. We've got a 500-kilometer real-life range, and that takes away all the anxiety. Right? The next question's around safety, and that is something that we've done a lot of work on, and we've showcased that with media and analysts, where we've taken a battery, put it in fire, we took a nail through it, we've had a 22-ton truck drive over a battery, done various crash tests, and that is playing out very well from a safety standpoint. The final question, and the important ones, around charging infrastructure. And as charging infrastructure grows, that will start taking EV penetration much higher. A lot of customers tell us we want to buy an EV, but if we have only one car, it's difficult to do that because we may not have charging infrastructure if we want to drive outside a city somewhere. And there's a lot of effort today to try and get that up as quickly as possible. So EV is on a good track. We do expect it to get to a 30% penetration of our portfolio over the next few years, and we feel we're on track for that.
And on a monthly run rate, what would that number work out to?
On a monthly basis, we don't look at it exactly from that standpoint because there will be some variations. But we are right now on track to hit about 5,000 to 6,000 a month, going higher than that, possibly about to 8,000 a month over the next few months.
Brilliant.
We're already getting questions, by the way, Anish. Live questions. Maybe we should get you on a, what is it called? Ask Me Anything,
Ask
right?
Me.
Ask Me Anything. We should maybe do that.
Ask me anything right now, in any case.
I'm not joking. Somebody's saying, please ask Anish about SML Mahindra and growth plans there. So there you have it. One question. And I have more, but I think time permitting.
So if we just look at the last few months, both SML and our trucks and buses business has grown very well. There are synergies with both that we are looking at tapping into now. And that will position us on the track that we've outlined. Right? We said that we're doing this not just because we want to go from a 3 to 6% market share, but because we have a plan to get to a 12% market share. And that's the path we're on.
This is a very investor type question which I got, which is, you mentioned all these other companies, Mahindra Life and the holidays business, etc. And which is the business which you think which is set in such a way which perhaps accelerates at the fastest pace from here, in your opinion? All of them, of course, doing well, as you said. But if you had to pick one business in that portfolio.
So Prashant, for us, our focus is on strong execution. And if we feel that a business is not going to be a market leader or does not have the ability to outpace a market, then, as you know, we've looked at that very carefully and very often exited them. So today we've got a great portfolio of businesses. Some have scale and a strong right to win. Some have a strong right to win but don't have scale as yet, and that's what we are driving for. And some we feel have a strong right to win, but we haven't established that as yet. So those are the three groups of businesses we have. In asking for one specific business,
which lies in that circle, which with all of those attributes.
That I will leave to investors to decide. But all I can say is we have a very good set of businesses, and you're seeing that performance across businesses now. Right. Mahindra Finance is on a very strong track. It's now pivoting to growth. Life Spaces has done exceedingly well in terms of profitability. You've seen investors coming into Life Spaces now as well. And that business has literally signed up for a 14x growth in pre-sales, which is one of the key metrics for this decade. Our logistics business is executing very well and on a very strong path. Holidays is going through a transformation. We were number one in 8% of the market, which was timeshare. We're now looking at the entire leisure hospitality market with the aspiration to be number one there. Yes. And there are a lot of actions that will take place. Aerostructures business is growing at a very rapid pace. And I can go on. So all of these are very, very strong businesses. So I would just say that, pick one in every industry.
I think,
well noted.
Anish, we'll leave it there. It's great conversation. And ask me anything coming up with Anisha of Mahindra and Mahindra. Huh?
Right. Sounds good.
That to the viewer?
I am open to it.
Thank you very much, Anish. Appreciate it.